of URL Insurance Group, and I'd like to thank everybody for taking a few minutes to be with us today. We have a good program for you today. I can't wait to get started. But before I do, the most important thing, I'd just like to say thank you for all you producers that are on the phone or on the line. We appreciate all the business that you send through URL Insurance Group, whether it's annuity, life, health, senior products. We definitely appreciate it. We know you have a lot of choices in who you can work with as far as a marketing company, and we do appreciate you working with URL. We'll do our best to provide you the best service and products that we possibly can. To those of you who are new on the phone, welcome. Glad to have you. We appreciate you taking a few minutes today to learn about a hot new product. Very briefly, the annuity business the last 2 years has been booming. It's been a great year for annuities in 2013, and that followed 2012, which was a record year for us. So people are finally realizing the benefits of no downside risk that indexing offers. Now today we're going to talk about a different type of product, though, other than annuities. I mean, I love annuities. I've been doing annuities for over 20 years. But the truth is, some people have needs that can be better served with single premium life. So today we're going to focus on that product. Single premium life has changed dramatically for the better over the last few years. As folks are learning about the new single premium life, sales have started to soar. Each month our production goes up and up on single premium life sales. And the biggest change is the living benefits that single premium life plans now offer. So let's first of all talk a little bit about why single premium life has been so popular. Bear with me a minute. Okay. First of all, there's a lot of factors, but let's talk about low interest rates on CDs. It's estimated there are about $5.9 trillion in bank CDs, money markets, and passbook savings accounts. A lot of that money is just waiting to be transferred to the next generation. What better way than life insurance? It always has been and still is the most efficient way to transfer money from generation to generation. And let's face it, with today's ridiculously low rates, it makes more sense than ever to move bank money to a single premium life plan. Number two, the high cost of long-term care. New long-term care plans are very expensive, and there's thousands of old long-term care plans being adjusted due to inaccurate premium assumptions from years ago. The high cost of long-term care, along with the restrictive underwritings of the plans, is leading to more single premium life sales. But last but not least, long-term care has the old use it or lose it property that single premium life with living benefits does not have. If the living benefits aren't used, the policy still has many valuable features that make it attractive. Third, there's old cash value in some life plans. There's thousands, millions and millions of old plans out there that have lots of cash value and very little death benefit. Not uncommon for us to see an old life plan with about $50,000 of death benefit and $30,000 or $35,000 of cash value. Single premium life is a way for policyholders to keep their life insurance protection in place, but get rid of those unwanted premium payments. And finally, the last thing that makes single premium life so popular these days is taxes. Of course, nobody wants to pay taxes, especially more than they have to. We can use single premium life plans to transfer taxable money into non-taxable life insurance. Now, we're not talking about avoiding taxes. That's not going to happen. But what we are talking about is minimizing taxes. And we'll talk a little bit more about that later on, and I'll even show you an example. Okay, so now you have a feel for why people are so receptive to single premium life these days. Let's talk for a few minutes about the product themselves. Now, URL offers a variety of single premium life carriers and single premium life products, each with their own unique provisions and underwriting. We represent Equitrust, Baltimore Life, Lincoln Financial, Americo, Genworth, National Western, all the top name carriers in the single premium life market. Almost all of them have the same basic key selling points. Single premium life provides an immediate death benefit greater than the premium, and it's generally free from income taxes. It also offers tax-deferred growth. Single premium plans are either whole life with set rates declared by annuity carriers, or a universal life, with the most popular plans being indexed UL, which allows for greater cash value potential, and it's tied to the performance of the S&P 500. So as the cash values grow, so do the death benefits. And the death benefit is usually tax-free if it goes to a named beneficiary. But here's a really big selling point. One of the biggest driving forces in the sales of single premium life is the feature that allows the client to have access to the current death benefit due to chronic illness, which is home health care, terminal illness, or nursing home confinement. Now, let's take a quick look at the two products offered by one of our top carriers, Equitrust Life. And again, we offer a lot of companies and a lot of products, but Equitrust seems to be the agent's choice when it comes to it. Now, Equitrust offers both a whole life plan called the Wealth Sure and an indexed UL plan called the Wealth Max Bonus. Let's first take a closer look at the Wealth Sure plan. It offers a guaranteed death benefit greater than the premium, as I pointed out. Guaranteed values are based on 3% interest. Non-guaranteed current values the current rate is 4.5%, and offers living benefits for home health care, long-term care, and terminal illness. And as an emergency for clients, if they need money, there's a free withdrawal privilege, kind of like the one on annuities, where they can withdraw 5% of the current accumulation value starting in year 2. Now let's take a quick look at the guaranteed benefits for a 62-year-old female, placing $50,000 into the Wealth Sure plan. As you can see here, it offers an instant guaranteed death benefit of $95,500, almost double the premium. And the face amount is guaranteed for the life of the plan. You could also see the non-guaranteed death benefit is $100,237. That is more than double the premium. So wouldn't your prospects feel that this is a great way to leave more benefits to their beneficiaries? In addition, the death benefit can be used for living benefits as well. You can see here, based on the guaranteed death benefit, the plan provides for $95,250 of nursing care benefit or chronic illness benefit, and slightly less for terminal illness. In other words, all the death benefit is available except for $250. Now, we show the available living benefits on the screen here based on the guaranteed death benefit. However, in actual use, the company will go off the non-guaranteed benefits. So in this case, the amount of benefit available for home health care and nursing home care would be the $100,237 minus $250. Now let's take a quick look at the tabular values of this case, which show the guaranteed and non-guaranteed values. The guaranteed minimum death benefit, as I stated, is $95,500. And this will run to maturity, or age 121. We're only showing 20 years here. And the non-guaranteed side, values begin to grow as the years go by. As the death benefit grows, the living benefits grow as well, because living benefits are based on the non-guaranteed, or what we call the current death benefit. So you can see here in 15 years at age 77, on the far right, in this if this projection holds and the interest rate were to hold, the client's available funds for home health care or nursing home care would be the $105,434, subtract out $250, so you have $105,184 for the living benefits, not the $95,500. So it's quite attractive as an option to CD money or other funds for your client. Now, a more popular single premium product is the Wealth Max Bonus Plan. It is an indexed UL that offers 3 indexing options and a fixed account. The potential for cash value and death benefit growth might be better than the whole life, similar to the potential in an indexed annuity being a little better potential for growth than a traditional fixed rate annuity. Of course, past history does not guarantee future performance. So let's take a look here at the Wealth Max Bonus. Okay. The specs for this product show it's just like the whole life plan. It offers a guaranteed death benefit greater than the premium, guaranteed values and non-guaranteed values, and we'll cover the specs and current caps for the product in just a few minutes. But what really makes this particular product so popular is a 12% instant premium bonus and a full return of premium option for the client. That means they can get their money back anytime they want, or they can surrender it if the surrender value is greater than the premium paid. So those are some really great selling features that eliminates a lot of objections that clients might have. Again, the Wealth Max Bonus offers living benefits, and also the 5% free withdrawal is still available on this plan like it is on the whole life. Now, using the same example we did it previously, a 62-year-old female depositing $50,000, she would have a guaranteed death benefit of $98,000 in this case, and a non-guaranteed death benefit of $131,287. All the death benefit, with the exception of $250, can be used for home health care or nursing home care or terminal illness. Okay. Now, looking at the tabular detail in this product, again, we're showing the first 20 years here. You can see the guarantees in the middle. The $50,000 is always available as a return of premium. You have a guaranteed death benefit and a non-guaranteed. And the guaranteed death benefit assumes a 2% interest rate from day one all the way through, and the highest cost of insurance that the company is allowed to take out for the mortality. So in other words, it's a worst case scenario. The chances of that happening are pretty slim, but you never know. But the company, the state requires that we show the worst case scenario. So that's where the guaranteed comes in. The non-guaranteed reflects current mortality cost and a 25-year history of the S&P 500 applied with today's caps. Okay. And you can see the accumulation value in the non-guaranteed column anytime after the first year. If the client has an emergency or they want to go on a trip or whatever it is, they just want to give money to their kids, it's fine. They can take 5% out as a free withdrawal privilege. And that's every given year starting the second year. I should mention that both of these plans offer tremendous commission opportunities, commissions that are far greater than annuity business. And we'll talk to you that. We'd be glad to talk to you about commissions on a one-on-one basis. So, after looking at the WealthSure Whole Life and the Wealth Max Bonus Indexed UL, I hope that you have a feel for how the products can work to your client's benefit. But right now, I'm going to turn the phone over to my associate, Maria Adams. She will give you a quick overview of the specs of the policy and how easy it is to apply for and get underwritten. And then I'll be back to take a few minutes to discuss who the prospects for this type of plan really are. I think you'll find a few of them on the list that maybe you haven't thought of. But right now, let's turn it over to Maria, and she'll go through some of the underwriting highlights.
Hello, everyone. I just wanted to go over these two product specs on the two products that Joe had just discussed with you. More specific things like the issue ages. For the Wealth Max bonus, it starts at age 50 up to 85, and for the Wealth Shore, age 55 to 85. The minimum issue premium for both is $10,000, and that's single premium. The maximum issue for the face amount is $750,000. Again, both products, free withdrawals of up to 5% each after the second year. So for any kind of an emergency, it's available to them. Then you can see here on the interest rates and the caps. For the Wealth Shore, you can see the current interest rate of 4.50. And then for the Wealth Max bonus, you can see those interest rates. And even with the Wealth Max bonus, a nice fixed interest rate of 3.8%. And along with both of these, they provide the living benefits, which can be received on a monthly basis if the client prefers, or a lump sum. Also, as you can see on the caps, these caps are higher than the annuities, and that's because of the mortality charges that are in the policy. The life companies don't have to rely on making a profit on the spread like the annuities do. So that's a nice feature there too. And as Joe had mentioned, great commissions. Some do pay up to double digits, depending on the product. On this slide, I just wanted to show you the statistics on the products. The Wealth Max bonus, you can see that the sales are a lot higher than the Wealth Shore, and that's because of the 12% bonus that it offers, plus the return of premium. The average size premium is about $81,500. The gender of sales are mostly females that do love this product, mostly because mostly females don't want to be a burden to their children. So you see a lot more of them applying for this kind of product along with the living benefits. Source of funds, you will see that it's mostly banks. It's cash with app, savings accounts, CDs, and then you can see the breakdown of where the other funds are coming from. And the average applicant age is around 72, and then you can see the breakdown on the other ages. Now, how to get started on this product? It's pretty easy. First of all, you must be appointed with the company, of course. And once you've completed that, you need to do the application and disclosure with your client. And after you've completed that with your client, we ask that you initiate the telephone interview between the carrier and your client while you're there. It will just make it a lot easier and a lot simpler. Once you complete that application, those medical questions that are on your application are the same medical questions that the company will ask your client, and it will be fresh in their minds. And it lasts about 15 minutes. And when that is done and completed, we ask that you either mail, preferably fax the application to the home office, and within 48 hours, you will know if your client is going to be approved or not. So it's pretty basic, a pretty simple process here for an application. Now I'm going to hand it over to Joe, and he's going to talk to you about who the prospects are for these plans.
Thank you, Maria. Appreciate that. Maria's not feeling 100% today, but she still gives 100%, so we appreciate it. Okay, who are the prospects for this policy? And by the way, don't let the underwriting scare you. The average age of issue is 72. They've seen the high cholesterol. They've seen the high blood pressure. They've seen the diabetes. We have very few cases that they get declined because of medical reasons. And I'll go through that in a second here. So, but the prospects, who are they for the single premium life? Well, we already talked about all the money that's in, all the dollars that are sitting in banks, trillions and trillions of dollars. A large portion of that is sitting there in accounts earning less than 1%. Matter of fact, a lot of them are earning less than 0.5% these days. And that money is just waiting to be transferred to beneficiaries upon the bank holder's death. These are awesome prospects for single premium life. You can suggest to your client that they can get a much better death benefit for their beneficiaries. There's just an application and a phone interview so they don't have to give blood and urine, so it makes it really easy for them. And wouldn't your clients want to immediately increase the beneficiary's inheritance by 30, 40, 50% or more into a tax-free death benefit and still have full use of the money for themselves if the need arises? You know, with the return of premium, the product is almost unbeatable. There's very few objections that you can't handle. So they're great prospects. The second one is, as we mentioned, the high cost of long-term care. Many folks don't like the high cost of long-term care, and they don't like the use it or lose it benefit that comes with these plans. So they're perfect prospect for single premium life. If they move the funds to the single premium life and they don't have the need for care, it's going to go to their beneficiaries as a death benefit. So the benefits are never lost. Also, maybe some of you have been, your clients have been declined for long-term care coverage. Well, don't let that stop you from looking at a single premium life either, because single premium life is a life policy. So it's underwritten for mortality. So because of that, it's a lot easier to get issued. So we have many cases that are declined for long-term care, and we turn around and get them issued with single premium life plans. So just give Maria a call with any client you're working on. She'll check it with the underwriter, and we'll see how we can proceed with your particular case. Okay, how about those existing life clients that have old UL plans that are ready to implode, or ones that never add premium to anymore? And if you've been in the life business, the best thing you can do when those annual statements come in, you look at them, and if you see that folks have not been paying their premiums on these old ULs and the cash values are starting to get on the downside, and you know the cash value was less than it was last year and no premium was paid, good time to pick up the phone and ask the client, how come they didn't make a premium payment? And they'll probably say, well, I'm letting my policy run out. I don't need it anymore. It was good 20 years ago when you sold it to me, but I have investments, and if I die, my family's going to be well off. That's great, but don't let that policy run out and disintegrate. Suggest they take the remaining cash value, do a 1035 exchange to a single life plan. They'll still have some death benefit, and they'll have the living benefits that they probably didn't have in that real old life plan. So those are good prospects for single premium life. Finally, annuity clients. That's right. Many clients have no plan to use their annuity funds, and they're earmarked for beneficiaries. They would be great candidates as well. We're even seeing some people who have a lot of money in IRAs, and they know they're never going to use their IRAs, and we suggest they look at a single premium life too. Now, there are some tax ramifications we have to get by, but a lot of people, especially the ones with a little more wealth than the others, we offer a great solution for their IRA tax time bomb. But let's just take a quick look at a non-qualified annuity holder. Let's say there's a female, 65, and she had money in an annuity, and the original amount, the cost basis, was $100,000. And let's say that annuity grew to $130,000 over the year, so the gain in there is $30,000. Now let's say she's in the 30% tax bracket, so the tax on the $30,000 gain is roughly $9,000, so that leaves her with $121,000. Well, if she took that $121,000 out and put it into a Wealth Max bonus, the guaranteed death benefit on that plan is $220,220. So you took her taxable annuity that's probably just going to sit there and grow and get bigger and bigger, and the tax the tax ramifications down the road are going to get bigger and bigger. So you nipped it in the bud. You paid the tax now. You moved it over. She has a much higher death benefit. She has access to her funds, and she has some coverage for home health care, nursing home care, or terminal illness, something she didn't have before. So this is the way we're seeing some annuity business come into single premium life. Now, you can't do a transfer from an annuity policy to a life policy. You have to surrender the policy, and that's where the tax ramification comes in. And this concept isn't for everybody, but there are a lot of people where it will work pretty well. So if you want to discuss any of those cases, you can pick up the phone and call myself or Maria Adams, and we'd be glad to assist you. Our numbers are on the screen now, and we'd be glad to help you out with any case that you have. Now, let me just look here if there's any questions. Or any questions you want, we can field them for you. We do have one from Dennis. Will the LTC rider ever be approved in Florida? Good question. Florida is a tough state. It is not approved now, so you just have the death benefit. What they do, what Equitrust does in Florida, if you go into a nursing home and you're confined there, they'll waive all the surrender charges, which helps. But if you really want the benefit for long-term care, Dennis, in Florida we use another product. Baltimore Life has a great product also. It's underwritten the same way, application, phone interview. They actually give you an approval or a denial right on the phone, and they do have a benefit that is approved for long-term care. So we'll get you some information on that, but yeah, we do have an alternative in Florida. Any other questions out there? You can type them in. Okay, I don't really see any questions coming in. Either I did a good job or you just haven't had the time to type them in, but our numbers are on the screen. You can call us or email us. And our other counterpart, the guy who does a fantastic job on all our graphics on our website and our emails, is Jim McDaniel, and Jim is going to put up a poll question for you. So if you want to take a second, we don't want to waste your time if you don't want us to call you. We know your time is valuable, so there'll be a poll question. If you want to answer that, we'll know whether we should reach out to you or not. I do have another question here. It says, is the 5% withdrawal based on premium or death benefit? How will that affect commissions charged back? Good question. The 5% withdrawal is on the accumulated value. Okay, so if we can just screen back here. I think we can go back here. Here we go. It's on
Joe,
the accumulated value. Excuse me?
I'll have to close the poll in order to to go back, but I can go ahead and do that if you want.
Okay.
All right.
I just wanted to tell them the 5% is on the accumulation value, so it's not on the premium, it's not on the death benefit. And how does it affect the death benefit? If you borrow, let's say, $5,000, that decreases the face amount by $5,000. So it is going to decrease it. Whether you pay it back or not is up to you. You're not required to, but it reduces the death benefit. And how does it affect commissions? Well, if it's taken in after the first year, the client's allowed 5% free out, it will not affect your commission. If they take more than the 5%, then it could affect the commission during the first 2 years. After the 2 years, there's no charges. And if the client exercises the return of premium in the first 2 years, there is a charge back to the agent. If the client dies during the first 2 years, there is no charge back of commissions. So I hope I addressed that correctly. Let's see if we got more questions. Somebody doesn't know how to spell premium. That's no problem. My spelling is not my forte either. Okay, I don't think we have any more questions on there. Again, if you want to contact us, call us at 800-926-8875 or email us. We'd be glad to help you. We can do specific proposals just for your clients so you can see how the product works, and we'd be more than happy to work with you and to help you get started in this very lucrative and very much desired single premium life market. So thank you all for taking the time today. I hope we got out of here in time. Yep, right on time, 30 minutes. So thank you. We look forward to working with you. Have a great day.